Hello, ladies and gentlemen. If you'll stay with me in the next 5 minutes, I'm going to show you something that a lot of you have missed, or at least going to misunderstand, probably do it all the wrong way, and most worryingly are unaware nor understand really in terms of cyclicality, momentum, and structure what the market is about to do. And before you jump off the roof and go ahead running into the market and jumping all in into gold, either. I don't want you to do either. Remember, don't forget this is not financial advice. I'm merely a dude on the internet, coincidentally, who is closing on 2 decades working in the financial sphere and industry, anything ranging from a minor junior all the way to a full-fledged analyst and an independent analyst working with some of people you may know from the YouTubes, in fact. Now, so let's go over what I want today. I want to talk about today in today's video. Of course, we want to talk about gold, as you see on the screen, and a potential rally, as you could have been able to establish from the thumbnail. And no, it's not clickbait by any means. We are looking roughly at the range. In fact, you'll see in a second, we could be looking at 5,932.8 right there, the level right above the current levels you saw in the thumbnail and I'm currently showing off on the screen, and I'll explain why. If you think what you're seeing right now on the weekly directly correlates to the whole rally I'm talking about here, again, that would be premature. So wait, let's go over things one by one, step by step, before we jump all into the market. 1 minute is inconsequential. We are basically looking at the movement in the current narrow channel, the blue and red one, the one you see in the middle of the screen right now, that is basically moving sideways, indicating that we are roughly at the edge of the current broader channels. You can see the green and the red channel, which still is a bullish channel in the grand scheme of things. Of course, this bullish momentum does not indicate anything with regard to the broader channel. All it does indicate is that within the following minutes, we still may see a bit of an action of sorts, testing towards the end of the top, the resistance of the current very shallow and narrow short-term range. 5 minutes. 5 minutes, on the other hand, of course, momentum starts to become a little bit more important. On the grand scheme of things, of course, we have a very similar like structure. Now, our short range, our very fast channel, okay, our diagonal channel that we've been moving our trend within the framework of, expanded a little bit, and we can see that our short-term channel is pretty much identical to what was the long-term channel. In a second, our green and red will appear, and you see how the long-term channel looks very differently in the 5 minutes. On the other hand, what we were seeing as a long-term channel a second ago on the 1 minute basically was pretty much the equal of this 5 minute quick one that we're having right now. And so what we have right now is basically this channel almost seems at completion, very similar way that we saw on the 1 minute, but to the right side. Here we complete to the top, which is the left side, in other words, and it's far more probable that in the following time frames we'll see indication and signals for a correction and a move down within the framework of the current trend that we're moving within. And so that is indicative of a movement downwards. Pretty obvious, but let's see if we can actually see it. 30 minutes. In fact, we've been running high, as you can see right above me. A breakdown of how the stochastic RSI functions and how we read it. And as you can tell, first of all, on the 30 minutes, our short duration quick channel, as you can see, it appears to be a lot more bearish. Now the momentum becomes a lot more bearish, and the channel itself is bearish, leaning downwards. That is the quick, the swift channel. So let's look at the blue and red one are fast channel. So the green and the red are the slow channel, right? Channels or channel on a broader scheme of things. And so what you see, we basically this confluence, convergence of both of the channels. We're basically moving our way right now within a framework of a cell-like structure. We also are moving and revolving around 4,400 on a broad scheme of things, which is a psychological level. Right now, we're bouncing off what appears to be 4,500, which is a psychological level. And right here, with regard to momentum, we're starting to see how we may be seeing a reversal in the current upwards structure. So you see the momentum in this case has been persistently bullish, and we are moving in a framework of a bullish channel, yes. And yet, given how we are at the ceiling, at the top of the channel, it's going to be far more likely than not to see a retracement back down to the bottom of the channel, whether it's going to be swift or slow or following. For example, a good potential way this may play out is following the resistance of the current downward short-term trend, and thus resulting in this almost path-like scenario all the way to roughly, as we see this major support we're already familiar and just acknowledged, 4,400, before having some form of reversal and moving higher back into the bullish channel. Now, why do we think that is the case, unlike the market-wise, for example, that we are saying is going to go lower, basically going to go down? Let's look at the 45 minutes. In fact, look, Greg, looks quite bearish, yes, but 45 minutes allows you to predict with the directionality, and even if we are squeezing momentum, a handful of 45-minute candlesticks. In other words, looking at the following action, we're looking no further than the end of today's session. So not that far off. If we're starting to look at the daily chart, which becomes a little bit more interesting, the daily chart is the longer duration channel structure. Likewise, we can then anticipate, given the momentum and structure, a handful of hours forward. And so it seems like today's session is about reversal from the current established highs, moving downwards, retesting previous lows, in potential, or at least ascending lows, potentially again 4,400. In other words, what we are starting to seemingly see in these medium range time frames is a form of a correction. Now, I would argue that this 4-hour, although being bullish as quite a bit, still is in the sort of center range, in the directionality neutrality zone, basically anything above 50 and all the way to 80. Below 50 and all the way to 20. But since we are now transitioning, and you can see both variables are now above the 50, and we have clear divergence, meaning both lines are pointing in directions that will not force it to meet, because when we do have a crossover, we know this is when momentum shifts over, changes, pivots in the other direction. In other words, when we reach a completion of bullish trend, normally we'll have a pivot point and the market will transition in the other direction. So before that happens, we do enjoy a bit of a bullish rally. And although we are saying 4 hours appears to be more bullish than bearish, that still appears to be that worst case scenario. Given that range, we probably are moving towards the major resistance, 4,622, which does not negate a major correction. We simply see that there is a potential move all the way from where we're at right now in the direction of 4,621.1, 0.10, but 0.12, 1 to 3, but it really doesn't matter. And then a subsequent correction downwards. Within the framework of the smaller time frame, we're still testing what is the median for the current channel. Now, what I want you to pay attention to, again, is we're kind of having this mixed behavior, so that does indicate and give us confirmation of our potential retest, given how right now we're on the daily time frame. And although we are seeing a lot more bullishness, a lot more bullish momentum in the system, this is a print of what we transitioned from and into. Of course, we broke out of the channel right now. We're seeing a breakout like formation in this current descending channel. And if we're looking at our weekly, this is where things become truly interesting. As we saw earlier, we are seeing that basically our following next several candlesticks transitioning from what appears to be neutral bullish, but definitely bullish with clear divergence, moving towards the 80 range, which is indicative of a longer enduring upward trend. But likewise, for the weekly channel and the weekly trend, we have different support and resistance levels. If we pay close attention to where we're at, we are mere steps away from a confluence of our top of the channel, our resistance of the green and red, which is the slower happening one, at 4,621. So we are seeing that in the potential near-term future weeks or so, we're going to see a movement that will result in the grand scheme of things, even though we'll have some entanglement in and up and down internally, the result will be 4,621. But I want to point out, this is the real interesting bit. Now this, contrary to what we saw right now on the weekly, this actually, if that bullish momentum will print out as we expect and will exacerbate the bullish directionality that we have right now in the market within the following weeks, this bullish momentum over time will print into the monthly structure, and that monthly structure will become a lot more bullish, indicative of a longer enduring trend, which will probably, we can see a major support resistance level that we are already well aware of is 5,707.53. Let's just call it 5,700. So there's quite a decent range. There is about $1,000 and almost $300, 1,250-ish within that vicinity of a movement. Let's call it 300, since we still said we have a little bit of a couple of dollars to move down before we start moving upwards again. Of course, there is a wide set of support and resistance levels that we already acknowledged and proven to be very true, especially with regards to the market respecting them. And so it's not going to be all that surprising if we'll end up testing and staggering on some of these levels on our way up. So in other words, there is still time. But if we are paying attention to the harmonic structure that is already also in the background, we're going to realize that we have what we already are very well familiar with, is an inverted head and shoulders, which I can tell you that is very, very probable if we're going to see again. It does not have to be identical. The left side does not have to be identical, or rather the right side identical to the left side. But what I can tell you, that the both sides to some extent are parallel. And especially if we're looking right now, the current channel structure, it completely makes sense and falls in line if our upcoming wedge-like structure that we have right here basically will end up serving us as our major support resistance level before continuing the arm. Basically here we're going to have our neckline, movement into the shoulder, the right shoulder, since this is an inverted head and shoulders, and a movement to the upside as we're predicting with that destination of 5,707, forgive me. And so we're basically seeing clear indication that the market right now is in the process of building momentum. There's still plenty of time, and there will be corrections, and the market will stagger and people will get scared. And to some, maybe this looks more like a nice way to trade, in a set of swings. Arguably for me, it's far better to establish a position and see it through all the way to 5,700-ish. I would argue that this is a very nice, decent return, especially if we will end up retracing from where we're at right now. Most of you, that the Academy members, realize that worst case scenario, on a very bad day, we may end up retracing right down here towards 4,250-ish, give or take, on a very bad day. But you know what? Let's be fair, and let's say we end up entering around this area. We are looking at about 30% return within a handful of months. That is a very decent return, while everything else, as we're seeing right now in the broader stock market, appearing to be a lot more bearish, and directionality appears to be a lot more full of fear and hesitation. I would argue that this certain structure appears to be a lot more confident than the opposite structure we see in the S&P, which I just spoke about earlier in today's live session that we done on YouTube. By the way, if anybody here wonders, Greg, why are you not making as many videos as before? Well, simply because I'm making a live every day. I talk to my community members. I have students in my technical analysis university in the Discord where I teach people one-on-one. And also, before I forget to mention, real quick, quick. The entire community subscription right now is highly discounted, so don't miss out. Whether you want to join the basic tier to get introduced to the whole system, and instead of it being $10 a month, you can switch to your pay annually, and you'll get 50%, but 50% from $8 instead of 10, so you basically get 70% off instead of just 50. If you sign up right now, this discount will last only until the end of the month. I kind of have a birthday at the end of the month, and I consider August to be that lucky month, if you will, and so I decide to accommodate the members, the viewers, and so on. So now is the perfect time to sign up. And of course, if you do want to learn one-on-one with a tutor, me, how to be independent and how to analyze the stock market the same way I do, and on a far more professional level that I present on the YouTube videos, simply because there is a far more advanced tier to my community, my academy, where I teach my members. And in fact, if you want to see, there are some testimonials right here from previous graduating members and so on. And so I highly recommend you all join in and become part of the community and start seeing returns such as this, which is pretty awesome. One of my members was able to achieve such heights by making, returns of closing on to 100K in a month, of course, via trading, day trading more so. But the system is the background, is the knowledge, sort of the wisdom that allows you to do such things. And so I highly recommend you join in right now before you miss out. Of course, there's our broader community, there's the academy partition. When you finish the one-on-one, you're just not being thrown into the deep end, you remain part of the membership, and I talk to my members pretty much on a daily basis. We have weekly meetings. In the academy membership, we actually have 2 meetings, well, a minimum of 1 meeting a week, sometimes up to 2 meetings. We also have meetings with the Patreon members occasionally. Of course, going over charts, technical facets of the market, discussing geopolitics, anything and everything in between. I post charts on Greg's Charts channel. We have various other channels, of course, for various other things, like I said, ranging from the posting about finance, geopolitics, science, and tech, and so on, as you can see right here. But various other things, of course, charting 101 for people who want to start to get the hang of technical analysis, and the more advanced tier for the people who want to basically become truly independent and their own analysts. I really do spend tremendous amount of hours with my students and teach them how to be professional independent analysts for themselves. In other words, ladies and gents, real quick, just to kind of sum it all up, we are now looking at a building up structure on gold, and we're seeing it on the various time frames. Even those who are in a smaller range, they play very neatly into the broader process that will be had in the market for the following months. As we said, again, we're not timing the market, but rather identifying processes that complete this movement. Right now, it's a guesstimate of sorts, the 5,707. It may also end up being slightly higher, such as 5,932, and maybe, don't even let me, promise anything, but we understand that this movement can end up being quite elongated, and maybe this is a sort of a little secret for those who stayed this long and then watched the entire video. We maybe are even looking at 6,289, but we cannot confirm that before we reach 5,707, end up testing it at least for a little while and see how the momentum looks like at that stage. As we're closing in on what we think the destination is right now, we may end up, in fact, seeing something completely different. What happens if we may end up stretching the movements, just like what we saw right now in the stock market, basically elongated, stretched movements? The broader cyclicality will play out as it's meant to. The simple thing that I mean is that simply the thing will be slightly elongated, resulting in a process that, although will stagnate around the 5,652 or 5,707 range, will still continue, will have more juice in the system to continue all the way right here to 6,289.9. Let's just call it 6,290. And when you say that, you may as well call it 6,000, 6,300, merely simply because how close it is to that range right there. and with minor slippage from 2090, as you can see, 6,290, as you can see, pardon me for the confusion, we can easily slip towards 6,300. That is all, ladies and gents. Of course, I highly recommend you join the community, like I said, to see the broader analysis of this and why it's so indicative that this is the case. I am warning and giving a shout out to this broader process far in advance. There is plenty of time before it fully completes. And remember, there will be a correction that, although it's not completely going to be parallel to what we see right here on the left side, it's going to be similar enough to make people wonder and feel like maybe we are going down and not up. But yes, it's merely a correction inside of a broader upwards trend. And we can see that on all the important time frames, that right now the process that we're going to go through is mainly build up, kind of the opposite of the left side of what we had. This right here, the opposite of that will be right here, and we're still kind of building it up. And remember, it doesn't have to be parallel, so that means that neckline does not have to be here. In fact, it can result in a higher point, subsequently resulting in a higher point for that right shoulder, and resulting, as we said, very easily with that 6,300 range. And so there's quite a bit of money there to be made. Of course, this is not financial advice, but merely my analysis. To each their own. And yeah, I highly do recommend that you keep up to speed and follow this trade along if you do decide to participate in it. But more so, I highly recommend you join my university, my community, so you'll be able to analyze on the go and not just be guessing what as most people are doing, other than my community members and people who truly understand the in-depth technical analysis tools and charting processes. Love you all. I'll see you on the next one. Bye-bye.